Today, I want to talk about ways that you can become tax resident in the US. Now, tax residency or residency in the US for tax purposes is different from the immigration definition of being a resident. So, one can be technically in the US illegally, yet still be a tax resident. So, because the definitions are different. And even when you talk about tax residency, the residence tax residency for income tax purposes is different from tax residency for transfer tax purposes. So what I mean by transfer tax, we discussed that in other videos where I'm talking about gift taxes and estate taxes. That definition of residency lies in the concept of domicile. What I'm talking about is residency for income tax purposes today. So generally speaking, there are 5 ways of being tax resident for income tax purposes in the US. One, if you're a US citizen, by virtue of being a US citizen, you are a tax resident even if you reside outside of the US. Two, you can trigger substantial presence by crossing 183 days. Now, that 183 days is a bit of a calculation that involves not just the current calendar year, but the previous 2 calendar years. But suffice it to say, if according to that calculation, you've crossed 183 days, then you're a US tax resident. 3, by virtue of being a lawful permanent resident, otherwise known as a green card holder. 4, when you move to the US, often you move sometime during the course of the year, not necessarily on January 1st, right? But you can elect to be treated as a US tax resident for the entire year on the year that you first arrive in the US under Section 7701B4. And the 5th way that you can become a US tax resident is if you're married to a US tax resident and you make an election under Section 6013G of the US tax code.